In this video, I'm going to be showing you the most amazing gold trading strategy for binary options. If you love trading gold, I've got the best strategy for you. And I must say this is one of the best gold trading strategies I've come across in a while. So if you're looking to maximize your profits, you're going to want to stick around for this one. But before we get straight into the video, are you sick and tired of losing money trading binary options? Well, I have the solution for you. I have a Forex binary option signals room where I send out 5 extremely profitable signals per day. We trade the live markets Monday to Friday and we're making crazy money every day. My signals are consistent with a win rate over 75% with a proven track record. If you're interested in learning more about trading and becoming a better trader, I do regular breakdowns of my trades where you'll learn a lot. If this, of course, is something you're interested in, the links to my Telegram channels are in the description below. This is your golden opportunity to start making some real money. I'm waiting for you. Okay, before we get straight into how this strategy actually works, just keep in mind we are using the pocket option broker and we're trading gold OTC. You can use whichever broker you want, and the best part about this strategy is that it works for both gold and gold OTC, so you can trade whichever you want. That doesn't matter. Now, for this strategy, we're going to be using the 1 minute time frame and the 1 minute time frame only. So what I'm going to do, guys, is I'm going to go to previous market data to show you guys exactly how this strategy works, as this will be easier for me to explain. Okay, so I'm going to stop right here because it looks like we have a pretty decent example. So when it comes to trading this strategy, the very first thing you need to do is you need to identify market structure. And in this example here, as you can see, market structure is very bullish. The price is creating higher highs and higher lows. Once you've identified market structure, what you want to do is mark out the key support and resistance levels. In this example, market structure is bullish, so we're going to mark out the key higher highs and higher lows with support and resistance levels. Just keep in mind you can use rectangles or trend lines to mark out your key levels. It doesn't really matter as long as you mark out your key levels. Once you've marked out your key support and resistance levels, all we need to wait for now is a trend reversal. For those of you that do not know what trend reversals are or how to identify them, please go and watch my previous video where I go into depth about trend reversals. It's extremely crucial that you know what trend reversals are and how to identify them, because they are a key component to this trading strategy. But if you know what trend reversals are and how to identify them, you're good to go. Now, in this example, for a trend reversal to take place, we'd need to see the price break below this higher low or the support level that we have over here. And that is exactly what happens here. As you can see, we get a clean break of the support level, and it's not just any old break. As you can see, the body of this candle closes well below the support level, confirming the trend reversal. So now that we've got that trend reversal, all we need to wait for now is a fair value gap to form. I'm sure you're probably wondering, what is a fair value gap? A fair value gap is a smart money concept, also known as an imbalance, which is an area in the market that has unfilled orders. You'll see that in this example, we've got 2 fair value gaps. And in these 2 zones, you've got unfilled orders. And the odds of the banks also having unfilled orders in these zones are very high. So at some point, the banks will manipulate the price to come and fill all these unfilled orders. Now, one way that you can identify a fair value gap is by finding 3 candles of the same color with a big gap in between. You can place the top of the fair value gap at the bottom of the wick of the first candle. Then you can place the bottom of the fair value gap at the top of the wick of the third candle. This is an example of a bearish fair value gap. And as you can see, not too long after the fair value gap formed, the price came all the way up and filled all the unfilled orders. Okay, now here's an example of a bullish fair value gap. As you can see, we've got 3 green candles and a beautiful fair value gap. And shortly after the fair value gap formed, as you can see, the price came back down and filled all the unfilled orders. Guys, just remember that fair value gaps form on all time frames and they come in all shapes and sizes. Fair value gaps are another key component to this trading strategy, and now that you have a better understanding of FVGs, we can proceed with the strategy. So now that we've got our trend reversal, all that we need to wait for is the very first fair value gap to form. And as you can see, the very first fair value gap forms literally at the break of support. Now, you guys don't have to mark out the fair value gap. Instead, we're going to be working with the top of the fair value gap. So we're going to mark out the whole candle here because this is the zone that we're going to be working with. So once you've drawn out your zone, all that we need to wait for is a retest and a red candle to form within the zone. And that is exactly what happens right over here. The reason why we need a red candle to form within the zone is because number one, this is a bearish fair value gap. And number two, we're looking for sell positions. So once a red candle forms within the zone, this is a confirmation to us that the price is most likely going to proceed towards the downside. Just keep in mind, guys, that the red candle doesn't have to close in the zone. It can, but most importantly, we need to see part of the body of the candle form within the zone. So the candle can close in the zone or it can close below the zone. It doesn't really matter. In this case, part of the body of this candle forms within the zone but closes below it. And this is a confirmation to us that we can go ahead and open a 2-minute sell position. So this would have been 2 minutes and the trade would have closed on this candle right over here, and that would have been a beautiful winning trade. So let's just go ahead and recap on this real quick. As you can see, market structure was bullish. We then got a trend reversal on the break of this higher low or the support level. After the trend reversal, we identified the very first fair value gap right over here. We then went ahead and marked out the top of the fair value gap by highlighting the whole candle. Price came back up, tested this zone. We then got a red candle that formed within the zone and closed below it. On the close of this candle, we would have opened a 2-minute sell position, and after 2 minutes, we would have won the trade. And it's really that simple, guys. So I'm going to get into another example. This time we're going to look at a bullish fair value gap. Now here you can clearly see market structure is bearish, creating lower lows and lower highs. So I went and marked out the key support and resistance levels. And if we go and zoom in here real quick, as you can see, we got a break of this lower high or this resistance level on this candle right over here, confirming the trend reversal. After the trend reversal, the price came back down a little bit and the first fair value gap formed on the break of this resistance level. Now, because this is a bullish fair value gap, we're going to go ahead and mark out the bottom of the fair value gap by highlighting the whole candle. So the price continued soaring to the upside, and about an hour and 10 minutes later, the price came all the way back down and filled all the unfilled orders we had in this fair value gap. And not only that, the price came all the way back down to test our zone, and as you can see, we got a green candle that formed within the zone and closed above it. So on the close of this green candle right here, we would have opened a 2-minute buy position. That would have been 2 minutes. And on the close of this candle right here, we would have won the trade. Now, listen guys, when it comes to this strategy, it's very important that you're patient because you will be sitting on your hands most of the time. You may think that you have the perfect setup, but then price goes and breaks right through your zone, like in this example here. Or you might even find the ideal candle that you're looking for doesn't close in your zone. And I promise you, there will be times where you end up sitting for hours waiting for the price to come and test your zone. If you find the price has still not tested your zone after about 2 hours, you can completely scrap the setup and start looking for a new one. In these situations, you need to be disciplined, you need to be patient and wait for the perfect setup. If you see the market is consolidating like in this example here, you want to avoid trading at all times. You only want to be trading in a trending market. Keep this in mind because this is very important. And those are just a few things you should keep in mind when trading this strategy. But overall, this strategy is truly unbelievable. I've backtested this strategy and achieved some unreal results. To show you exactly what I'm talking about, I'm going to get into a couple of live trades to show you how I would trade this strategy effectively. So sit back, relax, and enjoy. And that's 3 out of 3. I'm just going to make it very clear to you guys that you're not going to win every single trade. You will lose trades at times, it's normal, it's part of trading. But if you stick to the rules of this strategy and you're consistent with your discipline, I have no doubt this is the only strategy you'll ever need. But I hope you guys enjoyed the video, and if you did, go ahead and smash a like on the video and subscribe to the channel if you are new, and I'll see you in the next one.